Hunters, welcome back to the Daily Hunt. I'm Henry Hunt and I am a swing trader, a portfolio manager, and I share my daily insights here on my YouTube channel with you guys, what I think the markets are doing and where the markets are going. I will say this, I haven't been able to make content in the last 2 weeks. We've been busy with other things I need to organize and move away from the UK, as well as a few other things that I'm looking to do moving forward. I've been able to organize my projects now fully, and I will be posting every day on here, sharing my thoughts and insights. Now, where are we and what will I be covering today on the Daily Show? I'll be covering tariffs. That's the key thing that I want to be discussing here, but I'll give you guys my insights there on whether these tariffs will stick, whether they're going to have a long-lasting impact, and whether the markets will continue to sell off in the next few days and weeks. I'm also going to share with you guys my thought process throughout the last 2 weeks, so you guys understand that if I haven't posted content on YouTube, I still have been making decisions for my portfolio. We were up around 10% in my private members group in our stock portfolio, as well as crypto. We did quite well there, and we managed to get out on time and protect and preserve some of those profits before we had the significant sell-off. But there was one specific thing that I was watching for about 3-4 weeks that was triggered on Thursday and Friday last week, and that's when I started selling and scaling back and being more risk off. That's what I'm going to be covering later on in this episode. I think let's get right into it. There'll be a lot of other things I'll be covering here about my portfolio as well, but let's get right into it and discuss the key points. Okay, so the big talking point right now in the markets is tariffs against Europe, 10% tariffs against all European countries that are rejecting Trump's plans to annex essentially or make Greenland part of the US. So these tariffs were the reason why we had a bit of a sell-off in the markets. We've had a sell-off across the board. We've had a sell-off in the S&P 500 and US stocks. The biggest sell-off, one-day sell-off in the last 3 months. And again, the last sell-off, which I think was the 10th of October, was again tariff related. So anytime Trump comes out and speaks about tariffs, we will be expecting sell-offs. It's not that bad, this one. The last one was quite bad. It's created a lot of insecurity and uncertainty in the markets. And this is another reason why we've seen gold doing really, really well here. As traders and investors are looking for certainty, as they're going risk off on risk assets like stocks and crypto, gold has soared up and moved beyond my target. My target was around 4.7K. I think we go to 5K here easily in the next few days and weeks. And it's looking really, really good for gold. Silver as well has been very, very nice to trade. We started trading silver and gold around this 9th November pivot point here. And then again on the 20. So if we look at gold, it was on the 20 something of November. This was a key pivot point for me, 6th of November for gold, and it was 9th of November here for silver, with another trade around the 20 something of November when we ended up trading some silver. The guys in the community that trade metals have done really, really well. And it's been a nice move here with metals. If you guys are wondering what was the thing that I was monitoring, what was the one chart that I was monitoring to protect myself, it was the US 10-year yield. Okay, here's part of the insights that I provide in the community on Discord. I wrote here, I'm still monitoring it I'm still monitoring it for a guide on whether we need to go risk off. So if you look at here, I've posted this a number of days and weeks before, saying that bonds are a must watch for me right now. If we break out, we are in serious trouble and further sell-offs, right? So we had this situation here. We had a head and shoulder pattern on 10-year yields, and then we had a couple of retests on this zone, and it was looking like we're going to go back down and then come back up. Maybe we're going to get a bit of relief on the way here, and then a move back up and a breakup. And then I wrote, yes, I have some big winners, but the last 2 weeks have been there have been some losers, controlled, meaning that I've minimized those losses, not accepting a 1R multiple on those losses, minus 1R multiple on those losses, but maybe selling for a minus 0.25R. The market is volatile. It's not risk on. I think the setups are there, but I'm very cautious. Okay, so I'm guiding everybody on the 15th, which is around, it was the Thursday last week, telling everybody in the community that this is my key shift here. Okay, and then what happens on the Thursday? We see a bit of an uptick. Friday, we see a breakout, and that was my key trigger point for starting to sell off and scaling back on my portfolio, reducing exposure and managing losses as well as winners, with the idea of preserving some of those profits. I did mention earlier that I was up as high as 10% for year to date, meaning the first 2 weeks of January, I was up 10% in my stock portfolio, and then I was trying to preserve some of those profits and de-risk my portfolio. Friday was a key pivot point, and then on a Monday we had the gap. So on the Tuesday we had the gap, mainly because Monday was I think it was Martin Luther King Day, so it was a national holiday in the US. So we had that gap here, and then we opened up much higher because of Trump's tariff against Europe. With that in mind, I also wanted to say that this was what I was doing on the 16th of January, de-risking. So unfortunately for me, I ended up taking some trades in crypto, at Coinbase and BMNR, which I thought were going to be quite good if we went risk on. It seemed quite nice. We had Bitcoin and Ethereum moving quite well for us, and we were in profit. MicroStrategy from the bottom, we ended up trading that one. That was in profit, and it was looking quite strong. And because of that, I decided to add in some coin and BMNR. This is where we lost about 1.5% on my portfolio. I risk typically around 1% to 0.5% on my trades. We lost about 1.5% here. Then I ended up selling some of my bigger winners, or selling partially some of the bigger winners. We had EMBJ, which is a aerospace and defense stock, and 15% of this at the recent highs. TM sold around 20% of this. Etsy 25% as well. It was running really well for me, and it's been doing really well. eBay as well, 33% of that. I sold a third of that for 1 to 3, 1 to 2 for Etsy, 1 to 2.8 risk reward ratio, and I think EMBJ was a 1 to 1.5. I must have forgotten to mention that. Although we lost 1%, 1.5% here, we end up scaling back on some of these positions and locking in profits, which kind of balanced out the portfolio. The problem actually came a little bit later. I think let's just stay here for a little while. It came out a little bit later with the sell-off on Tuesday. So we had a huge dip on the portfolio on Tuesday, and we had a number of liquidations on 1R there. We also had my portfolio anyway, because I don't know if all the guys were copying exactly my trades, but I end up having to scale back on some other winners and get out of some positions that break even as well. So it's been a very tricky period. What I will say about tariffs, and this is my thoughts on where tariffs will go. We have Davos on the 23rd, which is 2 days away from now. And I think that'll be a moment where Trump will be able to, and other European leaders will be able to negotiate those tariffs and the Greenland issue. I think it will be a lot trickier than just a quick conversation, because we are dealing here with a semi-independent sovereign country, which is dependent on Denmark, and it will take a lot of diplomacy and negotiating to get something done. Trump is clearly trying to get a deal done here, and is pushing back and looking to put some pressure on Europe to accept America taking over Greenland. It's one of those situations. Now, what I will be doing is I'll be talking to you guys on this next section of the video about my portfolio and where we stand. But if you guys are interested in joining the Trend Hunters community, where I provide market condition analysis like the ones that you saw earlier, where I provide you guys with my thoughts and processes on what I'm watching for risk on, risk off. And that'll be on all markets, including crypto, gold, Forex, commodities. You go in, follow the link below in the bio and join just for £15 a month. On top of that, I also add one live stream where you guys get to see me scanning for new ideas every Sunday, and new ideas shared for stocks and cryptos as a watch list. I'm not giving you signals there. It's just my watch list, and it'll be one or two stocks that I look at every day. For example, yesterday I was looking at AIRS as, and I was looking at IonQ as potential breakouts and swing trades. These are the type of trades that I'm sharing. I'm sharing them at the moment that I'm looking at them and adding them to my watch list for potential trade. Go and join the community. The link is below. And also join all of my other social medias for other insights and analysis. Now I want to go into analyzing the overall market and where I see it. Okay, just like what I do in the Trend Hunters community, I will be providing you guys with some insights. What I will mention here is, for a number of weeks, since the 18th of December, I've been mentioning that we might be in a distribution. As you can see here, we haven't moved far away from the average price, which is around 6.7K on the S&P 500. And we've had these multiple dips, and it looked to me like a distribution. I thought we might go all the way up to 7K, 7.1K, and then sell off. But we had pressures here, as well as the tariffs, that ended up leading to a sell-off. It was looking weak. Something was brewing. Uncertainty was high, and then we had the sell-off on Tuesday and over the weekend. But it was looking very, very weak, and this is what I was sharing with my community members throughout, saying it's risk off. Although I'm taking some risk on, it's still risk off, and it's we should be looking to reduce exposure as much as we can. Nasdaq as well looks like it's in it ended up breaking up higher here with some hope, I think, and it gave a lot of traders hope that we were going to go into a move higher, and then it crashed down yesterday with tariffs. It looks to me like we go to 24.6 with S&P also going to around 6.7K, maybe even a little bit lower here. We can even go as low as 6.5K. Now, how much is this as a percentage? This is the key here. What is the percentage on this? It's around a 6%. So it's not a significant dip. It's a retracement, right? It's a rebuild rather than a dip and a drop in the markets like Feb to March of last year, which was 20%. And I think this isn't tariffs on the whole world like it was in Feb and March of last year. This is simply tariffs against Europe to get Greenland. So it will be resolved, I think, a lot quicker. Russell 2000 was looking overextended. I mentioned this on Twitter as well as in the community as well. And yeah, it's been the leading market to trade in the last 2 weeks or so. So yeah, I was expecting a bit of a dip here. The VIX also spiked. Another thing that I was watching here was the breakout of the VIX around this level, breaking above 17.8. Clearly, you can't time these things if it's news related and like it was a couple of days ago. But you can kind of predict that we were going on an upward trajectory and we could potentially break this zone very, very soon. That's exactly what I mentioned on top of that analysis that I provided for the US 10-year yields. Okay. In terms of crypto, really quick here, going to analyze crypto for you guys, where we stand. Crypto was a sell around the 92 zone. There was a break of this trend line. So you had it right here. A lot of my traders in the community ended up taking a trade around the 92 zone here for a short. It looks pretty good. I had the long trade from 89 and I ended up selling around 92. I didn't go short here just because I think it could find support quite quickly. And I tend to be more long. I like a long exposure rather than short exposure. And I'm very selective with the short side place. Ethereum also looks very weak here, but it could easily be a consolidation around this zone, as you see here, around the 2.7K zone. We'll see how it goes. Again, with Ethereum, I end up taking a small gain here by selling around 3.16. I made around a 1-to-1 here on this trade. Considering that it was very weak and there was a news event, I'm very happy with that trade. And I think where we stand here is it's a matter of just letting the market settle down. Negotiations to happen maybe at Davos, and then we will start to potentially see a restructuring here with the potential for a new swing on this move. But with the breakout here, it looks quite weak, and I think even if we move up higher, it looks like it's going to move like this and then maybe like that. So we are really looking at something like that. Okay. I do think this will move up higher a little bit in the next few days, maybe come back down again. So it will trap some more bullish traders, maybe here to here. And I'm being very cautious here. I think I'll leave this to my strategy to decide. At the moment, it's leaning short, and you have this gauge here, which is a short positioning around this level, and it's looking like it will be a short for a little while. It's around 2.7, and I think Bitcoin may be 84.5 is the level I'm looking for. Maybe as low as 82, 81 again. A lot of the altcoins, and I'll just share something with altcoins here because I think it's a decent insight for you guys to have. If you look at HBAR, for example, there's this wick on the candle. So on the 10th of October, we had a huge sell-off in crypto because of tariffs again. And I feel like most altcoins are going to fill up this wick. And HBAR was one of my trades, okay? So I ended up trading it around this level of 12. And then I ended up selling at 11.7 here just because I didn't see any more potential with this move, okay? So, and then again, 4 or 5 days later, we're seeing this huge downward trend going to lower lows here, and could even, like I said, fill up this area of the wick. So we could go as low as 6 cents on this, and it's very likely. And I think this is across the board on most altcoins. Look at this, Ethereum. Okay, we have I think Filecoin. Let's just see. Yeah, Filecoin could go down here. We have to be very, very careful. This huge liquidation event triggered something in the markets, especially cryptos and alts. So be very cautious. Different scenario here with Bitcoin, which I think has kind of bottomed out. As you can see, this was the 10th. And then we had a nice little trend. And then now looks like it's bottoming out. And it could go, all the way down to 68, 70, which are key, monthly levels. Yeah, this is my broad summary and analysis for crypto. For more insights, of course, go and join the Discord group, and I'll provide insights on these every single day in the market conditions a chat and my macro analysis as well. Okay, I think that's it for today. I am still monitoring the US dollar and gold. I think when we see a pivot in gold to the short side, we should be looking at probably an even deeper market crash. If gold crashes, then we could see the whole market crashing as well. A lot of people are saying, a lot of things I'm reading online, that potentially we get a rotation from gold into risk on. I mean, you can't get any more risk on than gold at the moment, where it's at all-time highs and it's still being bought up. I think it's riskier to trade gold right now than it's to trade other assets. Yes, those assets are going down, but we've had some nice opportunities recently. And I'll just show you guys what we traded in the community recently that I hold it quite well. I do, for example, so you can go into the Chinese market. I've seen a lot of opportunities in the Korean stock market. I've seen a lot of opportunities in the Japanese market and the Chinese market, and they're looking quite strong. Baidu, Alibaba, for example, has been quite nice. So alternative markets, healthcare has been very nice to us as well. We've been able to trade that. And then this is the most recent stock that I bought, which was moving quite well. But let's see how it's doing today. Today opened up quite a little bit higher here, so moving quite well. These are opportunities that I'm looking for, and I'm not looking to buy into gold or silver at these levels right here. I mean, this is a recipe for disaster for the whole market. I think if you're going to take anything away from this video, take away that if gold crashes, everything crashes with it. That's what I'm looking for. So I'm monitoring gold very, very carefully. If you didn't trade around November, around this level, this is a tricky moment to trade, okay? And not worth buying. I don't know who's buying here, but it's definitely not long-term investors, because where is gold going to go? You know, how high is this going to go? It could go to 10K. You never know. But look at this. Look at the monthly. I mean, this is insane. Absolutely insane. This is a recipe for disaster for the financial markets, in my opinion. Okay. With that, I will say again, go and join the community. Go and join all of my social medias. Subscribe to the channel. I will be providing you guys with more daily analysis. I will be trying to be as more consistent now that I've been able to organize a few things, and also my weekly show where I'll be giving you guys down a breakdown of my portfolio, and the weekly podcast I do with Eardy, sometimes by myself, where I discuss current events and things related to the markets. A lot of things will be shared on this YouTube channel. Subscribe and see you next time.